Okay, here's a square chart on the weekly. Again, you have this very apparent downtrend that I went into, and then starting in June of last year through now, a just huge chop period. Now I'm going to back it up. I'd have to actually. I just have to look at this just because of the magnitude of this downside move. I just have to, I force myself to be aware of some scary, some risk. Okay, so, if I was looking at more of an intermediate or longer term picture, I have to be aware of some potential significant risk. Obviously, we've went sideways in a range, very tight range. So it's just something to keep your eye on with Square, given what occurred from its peak to that June trough over here. All right, now I'm going to zoom in and I'll just look at, because the question was more the daily. And here's our 78.6, which it's now been riding for a few days here. Or actually, that's the cycle low. So it's already broke through. Somewhere, I think it's right around there. Yeah, it's already obviously broke through that. So we have a negative pattern structure right now. We are in the middle of the cycle. So just eyeballing it, you could say that there was timing for a low that was due. If there was a minor cycle there, which could get us a little bit of a pop. You have to be very, very mindful of this daily cycle low. So now I'm on the daily chart and we have a negative slim ribbon. Reversal Scout's turned up, which helps to indicate that this low is confirmed. But this overall pattern is negative at the moment. I mean, it retraced everything that all the gains that it made over those two cycles. So we have to watch for this resistance zone to defend against the rally. I mean, this must have been earnings over here that, knocked it pretty hard. So now I just have to do some draws. And it really couldn't get any traction off that gap or off that sell-off. So right now my directional bias is negative, bearish on Square. The overall market would stay strong. You could see it get maybe gets up to this 23.6. So into that slim ribbon, that's where it's starting right now, and it's starting to have a little bit of trouble here. But this next slim ribbon, so the top band here would be close to that 23.6, and then it's likely to be sellers both from those longs that are going after an intermediate or short-term low here, playing that reversal opportunity that would likely look to take some profit as it got closer to that 38.2. And then it'd have to make a significant move to start to repair what has occurred. So all you can do, again, it's always about odds. The odds right now, if you follow momentum, you follow trend, this is overall right now looking, because the slim ribbon is less sensitive than Reversal Scout. So in something that's trending, you want to pay attention to the slim ribbon. You can see how it expands here. So that means that the downtrend momentum is quite powerful at this point. Reversal Scout is excellent to give you that sense that something has shifted, but it is going to be more sensitive to changes where the ribbon will hold it more. So what you usually would look for is maybe Reversal Scout extends a little bit. We get up into these resistance zones, and then as you get back out towards the later part of the cycle, you could see another sell-off as long as we didn't close above that 71.4. So right now I don't have, looking at the daily chart, I don't have don't have a signal at the moment. If the slim ribbon PO, which is at the top there, let me just expand this out a little bit so I can see a little further. Okay, so now I have a visual on this cycle low timing window where that period of risk would be. So what this, the reason that's important is because if you have a negative cycle structure, unless something major changes, then cycle theory is going to suggest that we're going to retest these lows, or at a minimum, whatever high we make, 78.6 is the initial target. But primary target is going to be, that would look something like this. So I have this swing, and there was really no progress on the upside. So my downside target, Katie, is around 52.75, which I would just say that's the downside target. And then, you look to start building a position as we get into this resistance zone. Maybe if you're, you can call it whatever you want, but in terms of like units, total units, maybe you're looking at a total units of like 3 or 4, however you would describe that for yourself. And what would be my signals? Well, I'm going to just talk through the potential signals that you could have to build a position, and where maybe half the position could get built first, and then you'd look to build the other half once you have certain other conditions in your favor. And in particular, that would be momentum, maybe some price action. So I'll talk that through. So starting to build a position, even if we got a slim ribbon PO that fired a signal, that could be the first entry back on the short side. Now, because of where we are in the cycle on, well, I mean, the weekly cycle is midpoint, so there could be a couple weeks of rally still. So Katie, I would definitely want to have, where if I want to take advantage of the time that is suggestive, my expiration period probably out a month or around there, give some wiggle room on the upside. And so that's what I would look for. Now on this,
Up to where?
I would say 65 is where it really should start to struggle, and 68 would, would be very low probability of it getting up over that level. And then again, the target being back at least a minimum. Now the target's 52.75 right now. But I got to see a signal. I don't have a signal yet, and that signal would be slim ribbon PO firing negative. That would be the first entry in. And then as it got into this resistance zone up here, I would look for the reversal scout to roll over, suggesting a peaking phase. And I would want to see the slim ribbon on the 2-hour go negative to suggest to me that that peak has likely occurred and that the new downward motions in effect. So that's what's setting up. We really don't have a signal at the moment. That first signal would be here if the PO fired, and then I'll be looking at that 52.75 and reevaluation, first reevaluation above 65.
Okay. I will take the screen.
Okay. Again, what we're looking for when you're trying to do your directional bias is a sense of pattern structure one way or the other. And if pattern structure is to change, my position bias is going to change. But at the moment, this pattern structure doesn't give me, on the time frame that we are covering, which is daily chart, it doesn't give me anything meaningful to work with on the long side. Now, as I narrow down my time frame, I could probably find something in the 2-hour, possibly on the long side, on the intraday. So that's what you have to remember too, is just because we talk about there might be a bearish structures on the daily and the weekly chart, doesn't mean there's not opportunities to go long. It doesn't mean that your edge that you're seeing isn't right. It's just you have to have something that helps you determine what your directional bias is at a very specific time frame. And then you have a valid trade setup that suggests it's time to enter. All right, Katie, you can take it away.
Okay, so here's square, IV rank 0. So if we're doing a relatively near term what expiration? Are we looking at a month out, 29 days?
Yeah, yes,
Okay, so let's go to that September 29th.
which matches up
And
to the cycle low timing window for the daily chart,
okay, and so I think I saw you said 65. That's the one standard deviation for the upside
right?
possibility that you would
Okay,
see. That's one standard deviation move. Obviously, you can see that there's not, again, with low IV rank and lower priced underlyings, you're going to have a hard time collecting a lot of premium that far out. If
okay,
you sold like a 64 call naked, you're only getting 60 cents. If you're trying to do both sides, that might be a possibility. If you went one standard deviation on both sides, now you've got almost $1, which meets my rule. It gives you
okay.
7 short deltas, but you don't have enough premium to buy any wings. Also, so let's take a look at that. So that's what that looks like. It covers essentially your levels. If you, let's just say hypothetically, you're collecting $1. If your short calls at 64, that covers you to 65 and down to 49 on the downside. $1,600 of capital. This wouldn't scare me because that might be more than somebody wants to put up. You have a high probability of profit. You're getting the $4.90 in theta, short deltas. If this goes sideways, you can roll the call down, you can roll the put up. We just did that on the Euro futures trade to collect additional premium. Another thing that you could do if you wanted greater profit potential in that zone, kind of that neutral zone, let's try to do, this would be a reverse jade lizard. I don't think we won't be quite up to the 65. This zone in here gives us a slightly more profit potential, no risk whatsoever to the downside if the wheels fall off.
Hmm. Yeah, that's an interesting one for
Yeah.
sure.
And you could possibly move, let me go back to the table. If you moved the, if you weren't, if you were willing to go just to the expected move here, move this to 62. Now you're collecting, up in the 1.5 for your credit, 140, if you wait for a move back towards the upside, you might be able to collect more. You could also move this put spread down, and then if the credit collected is going to be a function of where you put these spreads. Because if you look at this, you, again, with the lizards, you have to cover the width of your spread. So if you have a $1 wide spread, which is why I'm always setting it up this way for these demonstration purposes, because $1 is much easier to cover than say $3 or $5 with selling the opposite side. So here we have a $1 wide spread and we are collecting almost 30 cents. That means we have to collect at least 70 cents on the other side to make it over $1. So if we put that right there, now you're collecting $1.07, which was very similar to just doing the strangle, but the strangle has risk on both sides and the lizard does not.
Hmm. So now let's assume that square, there's a signal, the slim ribbon PO fires, and we want to, as Walter was pointing out, if the directional conviction accelerates, then what types of strategies might fit given the IV rank?
Right. So the
So
IV rank does not imply a short premium strategy. The IV rank implies a long premium strategy.
right.
And especially if we're expecting square to go down,
Hmm.
when you when you put on a short premium strategy with a downward price assumption, usually downward price action raises the volatility, which is going to make the option prices more expensive. That's the opposite of the condition that you want when you're short premium. You want volatility to
Contraction.
collapse. So when you have a rank of 0, you're wanting a downside move and your analysis is suggesting that, then that's actually going to help you, because if you get that move, you get a signal, and you will get probably a volatility expansion, which will make your options more expensive so you can sell them back for a higher price, a profit.
Hmm.
So you could do, again, any of the things that we discussed, all of the, just buy a call,
Right. Or
but
put.
oops, oh, excuse me, wrong side.
Yeah,
So,
you could do the debit spread on a put debit spread, right?
yep, you could do a put debit spread. Here's, $10 wide, just shift them around to try to get to that, sort of 1-to-1. How about this one? A 62.52, you got a max profit of 550, max loss of 450. It's basically a 50-50. Here's the curve.
So if you have a 50-50, but you have analysis that gives you an edge, right? Then,
Then yeah, 50-50 is just the theoretical
right.
probability based on the stock price, the options that you've chosen,
Hmm.
and, just the option pricing model. But if
Right.
you have analysis that is showing you that this is what's about to occur or what is occurring, then in theory, your probability is higher. So this is a really good, profit potential. Again, I think Walter made the point that if you, do a spread, you are capping your max profit. So if that
But
was
if
a
you're someone who struggles with managing risk, that's
Mhm.
why having a debit spread is critically important, especially if you start off, if you struggle with not taking your trades off when you have a losing trade, then you can try to start, minimizing some of that with more of a hedged strategy.
And if you're
But
just starting out and you have a small account and, even 450 is not, in your wheelhouse, or you simply want to just learn about the strategy if you've never put one of these on before, or you just want to try and take like a very small amount of risk, you can move these around to really
right,
whatever you want to. Just, the narrower you get, the less risk you'll be taking. And
right,
of course, your profit potential. If you just want unlimited profit potential because you think this thing is going to zero or down to $20 or something, then this is not your trade. If you are able to tolerate the risk, you could do, short 100 shares of Square, $5,762. If you want the zebra instead, you've got extrinsic of 204. So we're going to sell one of these, 670 bucks. There you go. 1-to-1, just like stock.
and that was using a jade lizard
This is the zebra.
or zebra, I mean.
Yeah. Which is a stock replacement strategy. It stands for zero extrinsic back ratio. Please go to the Ask Slim homepage, hover over that Marketing Partners tab, and click on Tasty Trade. That will take you to a page where you can learn more about Tasty Trade, our preferred options trading platform. If you do decide to open an account with them through our link, that helps you with some special bonuses, and it also helps us.